Ben Felix made a very controversial video the other day where he insulted the almighty dividend stock, and the dividend community is all up in arms. But does he bring up any valid points? That's what we're going to tackle here today. PPC Ian is also planning on making a rebuttal video to this as well, so I can't wait for him to go thug life on this topic. As always, guys, be sure to help a small-time YouTuber like me by hitting the like button and subscribing to the channel for more content. Now, this won't be a diss video or anything, as I really like Ben's content, and I think a healthy freedom of opinions is important for us to grow as investors. Ben starts off by saying select individual stocks that pay dividends is not the greatest of choices, because at the end of the day, the vast majority of people cannot pick individual stocks that beat the market. He also says the presence of dividends or growth of dividends is not an indication that a stock is a good one to own. And then most importantly, he says that dividends are not relevant when determining which stocks may have good future returns. Ben also gives many peer-reviewed articles in the video, which, let's face it, the vast majority of us are not going to take the time to read, and one of them is even from 1961. I mean, a lot of stuff has happened in the stock market in those past 58 years, and it would be very interesting to see if all that info still holds up today in 2019. He also correctly explains that every time a company pays out a dividend, its share price is adjusted to subtract the difference. Some people, for some reason, don't believe this, and I don't know why, because you can literally see it in front of your eyes. Just look at a stock's price the next time it has an ex-dividend date. So my response to this is going back to his original point, and that is, yes, a vast majority of investors would be better off buying an index fund that mimics the S&P 500 than going out and picking dividend stocks. Most people cannot beat the market, so even going out and picking only growth stocks, you still wouldn't beat the S&P 500 on average. Is a company paying a dividend an indication that the stock is a good one to own? Absolutely not. This is why I always cringe when I see so many investors here on YouTube share their portfolio, and it's just a bunch of high-yielding stocks that usually have major red flags that they choose to ignore just because they are only focused on that dividend. A company that is depreciating at 10% a year is not going to be offset by a 5% dividend yield. Not to mention there's so many other issues with this company and their company model, balance sheet, etc. And again, the most important part of Ben's video is a part that I think people overlooked, is when he says that dividends are not relevant when determining stocks may have good future returns. This, for the most part, I agree with him, because just because a company has had a great track record in the past of paying dividends and returning value to its shareholders doesn't mean that it's locked in for the future. Just look at my last video where I did a stock analysis of Target. I didn't start off by saying that Target has this great track record of paying dividends for 51 consecutive years. Instead, I talked about all the investments they've made on technology and how they've been successful and have been having to close the gap on Amazon. That's what I really care about, because that's what's going to allow Target to grow in the future and return great value for me. And more importantly, that's what it'll be doing to stay in business. If Target wants to give me some of the profits on the road, that's great too. What that 51 years of increased dividend payments really shows me is that this is a company that really likes to take care of its shareholders and is smart with money. Now, that doesn't necessarily mean what I just said is true, but being on the outside, that is the only perspective I have. And I would never think that just because Target pays out a dividend, that it's a great company and that its future looks super bright just like it did in the past. There's so many other factors that we have to take into account when analyzing a stock, and whether or not it pays a dividend is more towards the bottom of that list. Also, what I have a problem with is that Ben is only using past data, because obviously, unlike me, Ben can't go into the future and see what this new data will look like. What I mean by this is when picking stocks today, we have no idea what it'll look like in the future. Ben says don't use individual stocks, but that's kind of what exactly we're going to do here. So a stock like MasterCard in the past year is up 25%. In the same industry, we also have Visa, And in the past year, it's up 18%. Both of these stocks pay a dividend. And then we have a stock that doesn't pay a dividend that's also in the same industry, and that is PayPal, which is actually up only 16% in the last year, despite not paying a dividend. And then we also have another stock like Square, which I own in my M1 Finance portfolio, which in the past year is down 33% and pays no dividend. So that means if I had been holding on to the stock, I would have not made any money and would have actually lost a third of my investment. So imagine we were no longer in this bull market and we were in a bear market. All of these stocks would most likely be down, but at least I'd be getting MasterCard and Visa to be sending me dividends, which I could use as cash flow in case, let's say I was living off my dividends. I can't imagine the anxiety that would come with me choosing to sell my stocks in the red. Positive Investing also released a great response video to Ben's and raised a serious point that I had never even thought about in my life, which is pretty amazing because I watch a lot of YouTube videos and I've never heard it worded like this before. His point is that dividends are automatic payments initiated by the company, not by you. It's not like I hit up Starbucks every quarter asking, "Hey fam, where my dividend checks at?" "Oh, sure thing, citizen, we thought you never ask." Instead, Starbucks, like clockwork, sends you 4 dividend payments per year, and this takes out all of the active investing and emotions of having to sell your stock. Think about it. If you had over 40 stocks in your portfolio like I do, that gives me a lot of anxiety just thinking about having to sell some of them to get money. And anytime emotions are involved in the stock market, that's where mistakes and big losses happen. Some companies are just really boring, and I actually think their money would actually be better in my pockets than in their own pockets. A company like the tech giant Amazon might need to hold on to its money to continue developing and being innovative, but how much innovation are we really expecting from a company like Coca-Cola? Once Coca-Cola is paying its expenses and some research and development and expansion, I do expect that money. Last year, Coca-Cola paid nearly $7 billion in dividends out to shareholders. If Coca-Cola was spending $7 billion on something innovative with their drinks, I'd be a little scared. Also, a beautiful thing about dividends is the yield on cost, which is when your purchase price never changes, but your total amount of dividends do. So when Warren Buffett bought Coca-Cola in 1988 for around $2.50 a share, he now has a mind-boggling 62% yield. I don't think you would get a 62% return every year from Coke if it didn't pay out dividends. And if it did, ladies and gentlemen, what Coke is selling is no longer just a carbonated soft drink with high fructose corn syrup. As for people feeling Ben was speaking condescendingly or arrogant, I don't really have an issue with that. I think he's just very confident in what he's saying and what he's talking about. And again, I love that he's not afraid to challenge the norm we have in our community where everyone must worship dividends. If you guys agree or disagree with anything I said, I want you to tell me what you think of Ben's video as well in the comments. As always, guys, don't forget to like and subscribe because I'm always pumping out new content and having new ideas.